You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
Welcome back to Options Insider Radio, the interview program here on the old network, where we welcome on guests from throughout the world of options and derivatives and proceed to pick their brains for the benefit of you, the listener. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. If I sound a little bit different, it's because we're not coming to you from our studio in Chicago. We're actually coming to you from the scenic and sunny FIA Boca Conference here. Another good catch-up on all things going on the futures side of the fence. And joining me to help me do just that, futures, options, and all sorts of fun stuff, is Yuriy Shterk, the head of product management for Derivatives Americas over there at Fidessa. Yuriy, welcome to the program.
Thank you. Glad to be here.
Yuriy, it's been a while since we've had a catch-up with Fidessa. It's also your first time on the network, so maybe we'll start there as we do with all of our first-timers. Go ahead and give our audience a little bit of an overview of your background in the derivative space and how you found your way over there to Fidessa.
Sure. Okay. So I've been working on the technology side of futures trading for the last 20-plus years. Had different roles in different companies. Been with Fidessa for the last 6, and as Fidessa started to get serious getting into the futures trading space or derivatives trading space. So traditional Fidessa background is equities trading, global order management and execution management platforms. And for the last about 7 to 8 years, we've been focused on futures trading platforms for our customers in the FCM trading community. And that's basically when I joined the company, and been there ever since. And it's been a good ride.
So you focus on developing those platforms. Is there a particular product category you're focusing on these days? Is it mostly, or maybe your clients are focusing on, is it mostly indices? Is it mostly metals? Is there some area where you guys specialize, or your clients, or are you kind of all of the above in the product suite?
So our traditional, customer base, when it comes to derivatives trading platforms, were FCMs, and still are the FCMs, global FCMs, who are in need of providing trading platforms for their clients. So because of that, right? Because if you look at our customer base, they're going to be global players who are trading everything.
So you can't be a
under the sun, right? Yeah. So we have clients that are specializing in different things, but for the most part, it's indices and FX and fixed income and agricultural and commodities, and all of this is global. So firms of calibers, our customer base would be interested in trading Sydney futures and Tokyo futures, and Brazil, and then of course Chicago and New York and London and Frankfurt.
One of the fun things of a conference like this is that you get to kind of take the pulse on people, a bunch of different people on a bunch of different issues. And the one I've been kind of asking everyone about is obviously the last month and a half or so has been an interesting time in the industry. Everyone has different takes, different takeaways, different interesting things that they noticed during that time. So what has the last month and a half been like from the Fidessa perspective? Have you seen a lot of interest, a lot of interesting developments, a lot of interesting volume trends? I mean, the vendors are also kind of unique in that perspective, because you guys have a more of a, shall we say, a pan-system view of what's going on as opposed to one exchange or one broker. So you kind of see things trending on a more macro level. So what have you noticed over the last, shall we say, turbulent month and a half?
Right. But how about, let me start even before then, right? So like 2017, especially the latter part of 2017, as far as the industry was concerned, was primarily focused on MiFID. Right? And for the most part, nobody was interested in anything else, but it was all MiFID, 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 MiFID. Let's focus on that, etc. MiFID is thankfully behind us. Well, for the most part, right? There's still going to be some impact as we go forward, but for the most part, MiFID is over. Well, the preparation's been successful, the deployment's been good, and then as soon as MiFID was over, we kind of got ourselves as the industry into, volatility is back. And that was good. So from our perspective of our clients, volatility, the greater the volatility is, the better it is. The more trading is taking place, the more volume is taking place, and the exchanges are happy, so the FCMs are happy as well. So the impact there that we see is, it's actually interesting. I've been having a number of conversations here at the conference because there are a lot of banks and a lot of FCMs are here. And while they welcome volatility, some firms are struggling to keep up with it. Right? The technology may not be as good, or there's a lot of manual work that is still involved in the process. So the aspects in there is that the greater volatility comes at the cost, and the cost there is you need to make sure that your tech stack is able to keep up. Our clients are happy, and for the most part are welcoming the volatility and are able to deal with it. It's the platform that we provide. It's the integrated solution that allows them to remove all of the manual operations, so the automation is there, the workflow is there, and then this allows them to stay on top of everything that's happening in the market.
I should mention to our audience too, that's not thunder you hear in the background. We were recording outside, which is nice usually in Florida. We had a bit of a hurricane spout up yesterday. That was kind of fun from an audio perspective, and today we have the thunder of the bocce coins. Gives us a nice ambient noise. It's interesting, I think, from you guys, from a vendor perspective too. I've heard different things from different people who service different areas of the space. Some say, this turbulence of the last month and a half has awaken people to the need that maybe they need to upgrade their systems. They have to have a better handle on risk. They have to have a better handle on what's going on. They kind of maybe got, shall we say, a little bit complacent over 2017 when volatility was anemic and not much was going on in the space. And then we have some other people who say, this shocked a lot of them. Maybe they lost some customers. Maybe some customers left the space as a result of this. So it's kind of been a little bit of a back and forth. What you guys, sounds like you're probably more on the former, but is that your takeaway from what's been going on over the last year or so?
I actually think it's both. First of all, the result of volatility, one of the things that we see is there's just more people trading. So they're back in the market, where traditionally the aspect of risk and risk management was not as important, not traditional. Over the last couple of years, some firms have realized that they don't need to worry about the risk or the aspect of hedging because the interest rates were not moving anywhere. So they were kind of leaving the futures markets on a sideline, or the derivatives markets on a sideline. A lot of those firms are now back in play because the volatility, the interest rates movement, the geopolitical situation that isn't as clear, whatever's happening in Brexit, etc. So that kind of pushed people back into the fact that, hey, we need to risk. And derivatives products are great way to risk it. So it's one aspect, and we definitely see that. So more activity. Some of the players are either coming back or new players are entering the space from the buy side perspective. But then the other aspect is definitely on the sell side. Firms are realizing that they can't deal with the volatility, can't deal with volume, can't deal with the demand that suddenly awakened. And we now have a lot of conversations with the firms coming and saying that, what can you do for us? How can you help us?
It's interesting. So you're seeing new entrants coming into the space, lured by, shall we say, the return of some volatility of the space. They're saying, okay, this is viable for me again, whereas maybe for the most of 2017 it wasn't particularly attractive. So you're seeing a lot of that?
We do. There are more players in it, definitely from the buy side. Some firms that were not relying on derivatives in the past, because again, right, they didn't need to, and why spend the money on trades that if the interest rates are known ahead of time, you don't have to hedge. So because of that, right, why would you want to do that? But those firms are back, and as I said, we're also seeing a lot of new players, funds or firms that were set up after the financial crisis, and to them, all of this is revelation. It's definitely new.
And these new entrants, and maybe a lot of your traditional entrants too, are a lot of them recently, are they focusing on a particular product category? Have they all been maybe driven to the indices just because that's where a lot of the action and volatility has been? Or you've mentioned rates a few times. Has that kind of been an area where they're playing? Where are you seeing, shall we say, the most uptick in activity and interest these days?
I think it's all of it, all of the above. We definitely see a lot more activity in indices. We definitely see a lot more activity in the fixed income space on the rate side or the euro-dollar side here in the U.S. But then we're also seeing a lot greater interest in the commodities. Agricultural products, there are more volatility in it than it's been in recent history. There seem to be more entrants into this space. Energy products, well, there's always volatility there, but there seems to be some additional interest in there. Currencies pick up some additional interest as well. So it's all of the above.
I think I'm legally required to ask you about crypto at a conference like this because that's all anyone can talk about these days. So I'm curious, you guys have any plans or any forays into that space? It seems like I can't go 5 minutes without someone asking me something about crypto. So I thought I'd give you the opportunity if you have anything along those lines as well, or maybe on the FCM side. I know we have the futures listed now. People are looking at new products. Are you seeing a lot of demand from your end users for saying, hey, we need to add this sort of functionality because that's what the customers want?
Right. So Fidessa's approach to all of the development that we do is customer-driven. Pretty much everything we do is something that's been requested by our customers or the prospects that we're talking to. We do a very little amount of work in terms of market settings. So build it and they will come is not necessarily our motto. Our motto is, hey, the customer is asking for it, so we have to allocate some resources for it. So there was a lot of interest in crypto, specifically around cryptocurrency or Bitcoin futures towards the last 2 months of last year. We've done all of the work that was required, so if you are a Fidessa user, you are able to trade the futures on both CFE and CME. And then we've been supporting it all, from the day one. We don't see significant amount of uptake. Most of our client base is institutional, and they'd like to talk about cryptos. It's very little activity that's coming from those firms. And that translates into the volume that we see or the lack of volume that we see on our platform. So yes, it is something that you can do on our technology, but it isn't anything that we see a significant amount of uptake on.
Crypto certainly seems to be stealing a lot of the mind share these days, but you're right, a lot of the activity and the volume certainly is still on the other platforms. Crypto aside, Fidessa obviously has a long history of coming up with some interesting tools and platforms. I think the Fragulator, we talked about that years ago, with them mostly on the equity, kind of the fragmentation side. I know they tried applying it to options, and they were surprised to see that it didn't evolve as much, I think, as they were hoping. They thought it would be an evolving pattern of fragmentation, and that they saw pretty much it was one pattern, and that was kind of about it. So it wasn't as fun, wasn't as sexy on the option side as it was on the equity side. What else are you guys working on? Any interesting tools or techniques, or maybe some upcoming platform developments that you guys have that you think will interest a lot of our users?
I think let me break this question or the answer into a couple of different segments in there. So one of the things that may be interested to your listeners is the fact that we have developed and released a number of different options trading tools, call them algos, that allows our traders to utilizing our platform to do one-click delta hedging or one-click volatility hedging. So it's something that is available on Fidessa platform already, and a lot of our FCM clients are have made it available to their traders. Additional things that we're focusing on is number one is we're working on the multi-broker trading screen that will be available later this year, that will allow traders to take advantage of Fidessa expertise and Fidessa technology outside of their FCMs. So again, the traditional approach there is delivery via the FCM, and then FCM will deploy the mono-broker screen to their traders. So we'll have multi-broker screens that we will be offering to the traders globally later this year. And then in terms of outside of the EMS space, we are focusing on kind of two aspects of the trading at this point. One is streamlining the execution to allow FCMs and the specific firms to offer specialized or bespoke ways to execute the orders. Because for the most part, right, the algos that are in this space are very much the same, right? Everybody offers VWAPs and TWAPs and potential shortfalls or their rivals, and the competition has always been, well, my algo is 2% better or half a tick better, etc. What we're trying to do is to allow the firms to offer out not necessarily a single algo, but more the execution strategy. Allow them to say, we know what works better in a specific market. So because of that, as a buy side, you will give us the order, and then we will execute it for you in the best and most efficient way, given a specific set of specific market or market conditions or market structure, etc. that's happening out there. So we will have a tool that will be deployed later this year that will allow FCMs to configure those rules and set up those execution strategies that will be closer to what their clients are after. And then the second aspect will be more optimization in the workflow, specifically around the post-trade. We have a number of tools in there. So the post-trade is traditionally something that's been kind of in the back room. somebody was doing it. It must work, but the way how firms solved the post-trade challenges was, let's throw more bodies at it, let's throw more resources at it, and that's how we will deal with volatility or greater amount of volume that's going through through our platforms and so on. We're trying to streamline it and to allow our customers and their clients to have, whether it's STP or allocations, to make it as clean as possible and as real time as possible. So the buy side will see not only their execution results, but also their clearing results and allocation results on the same screens that they use for trading. And they could monitor it in real time instead of waiting till tomorrow's statement.
I think the multi-broker screen approach is kind of an interesting one. We heard that from a lot of vendors. They get a lot of pushback when they go to clients and say, hey, we have some great new UI feature or something like that, and we want to put this on your screen. There's so much pushback now from the end users. They have their screen real estate has become this very, very precious commodity. Doesn't matter, they have 27 screens in front of them. They have no room to put anything else on because they have it full of messengers and this and these analytics and these trade flows and all these other things going back and forth. So it's hard for a lot of these vendors to come up with some cool new bell or whistle, because people just literally don't have the space, or they're not inclined to add that space. So is that one of the reasons why you came up with a tool like that, to try to maximize what is it? Someone should come up with an indicator for that, the screen real estate.
It is.
It's a hot commodity these days.
The aspect of screen real estate is important, and it is probably the most important thing as far as the buy-side trader is concerned, because it's not only the execution tools. If you look at individual desktops out there, well, I need to get the news, I need to get my charts, I need to get the market data, I need to be able to interact either with my clients or with my brokers, but at the same time, I need to execute across multiple different brokers. How do I do that? So the traditional way of solving this problem in the industry has always been either, here's just the front end and there's really no back end in there, and then you connect to the brokers and then brokers do everything for you. Or, well, here's the vertical, and while it is multi-broker, it's still the same technology stack, and one specific vendor controls your experience all the way from the top to bottom. We are taking a different approach. Basically, let's do the combination of those two things, where you as the buy-side trader will have your own technology stack, and you will be able to control whatever algos you use, or whatever execution methods you want to use, or whatever analytical methods you want to use. But at the same time, you could also rely on expertise of your broker. And then if your broker has some additional execution tools, whether they're algos or strategies that are exposed to you, you could add them to your execution toolkit, for lack of a better word, lack of a better term. So can you end up with the best of both worlds that will give you the flexibility, you as the trader, flexibility to decide what you want to do, but at the same time rely on your broker, rely on your FCMs whenever the opportunity comes. And then all of this is integrated with better TCA, so you could see your execution results right there on the screen in real time in terms of how well you've done, how well your broker has performed, how well your algos have performed, and then be able to adjust in real time as well. So that would be our approach, is yes, precious commodity, screen real estate, but at the same time, I want to have my own brains into it, yet I want to rely on the brains and the flexibility and capabilities that were delivered, that were made available to me by my brokers.
And I know some firms have opted to go more of the API route, let the
Sure.
client kind of take the data, do whatever the heck they want with it at the end of the day. Is that something you guys are building up as well, to make for those clients who, for whatever reason, they want to take your functionality and then roll it into some sort of bespoke, maybe front end that they're used to using? Is that something you guys are working on?
I think it's hard. I mean, the flexibility is something that firms are striving for, but at the same time, it comes with the cost. It comes at the cost, and the cost is not only the cost of developing and supporting it, but there's also an element of risk and compliance. Right, so nowadays firms, the sell-side firms, the FCMs, are responsible for monitoring what their clients are doing. So because of that, especially because of MiFID and their Reg IT, if it ever comes out here in the US, is all about the sell side, as the main regulated participants in the markets, have to be in the know in terms of what their buy sides are doing. So at least the customers that we're talking to and then trading groups that we are in contact with, they are asking for flexibility, but at the same time they understand that they can't have it all, right? They can't have, hey, here's the API, do whatever you want, because their sell sides are not comfortable giving up the control. So our approach is going to be more about we will give you the toolkit, and then we will allow you to build stuff out, of the toolkit that we've delivered. But at the same time, you still have to be in line with the compliance, regulatory, and risk needs that are imposed on our clients.
Whenever I have a vendor on who has kind of a broad footprint across the globe with a lot of different partners, I always like to pick their brains on. Sometimes they see things developing before a lot of other people do. They're kind of the proverbial canary in the coal mine from that perspective. You mentioned MiFID before. We talked about crypto maybe getting a lot more buzz than perhaps it's warranted right now. But I'm curious for you guys who, like I said, you see activity across the globe in a wide variety of products. Are there any interesting trends you're noticing percolating up, or anything else that's maybe catching your eye right now that isn't maybe on the broad radar yet? Do you think it's going to be top of mind in the coming months or years?
I think, we've touched upon it already. The aspects of execution, which is having it flexible, and then allowing traders, a toolkit, whether it's something that they built or something where they rely on other providers, brokers or algo providers in the space. That's something that firms are definitely very interested in, making it visible. So the concept of TCA or order monitoring, what's in Europe is called best text policies. But for the most part, it's making sure that I have complete visibility of my execution results before the order is complete. That's another element that is definitely getting a lot of attention, a lot of traction. We have a lot of conversations around it. And then optimizations. Still a lot of conversations about making sure that I do what I do with less of a resource, less amount of time, and then be able to achieve better results.
Well, Yuriy, I'm glad we can get you on to have a little bit of a catch-up. It's been a while since we've caught up with you guys over there at Fidessa. As I always do at the end of the show, if there's something we forgot to touch on, or maybe there's a little hint, a little tease of what you guys are working on you want to leave our listeners with, now is the time. The floor is yours.
I think for the most part, we've touched upon all of the interesting things and cool things that are worth discussing. The only other element that I would leave your listeners with is the whole concept of how do we do what we do with the less of a resource. So in other words, the aspect of efficiency is important, and that's something that I know that a lot of our clients and a lot of their clients are very interested in, and they're asking us to think about.
Well, Yuriy, I'm glad to get you on. Like I said, it's good to check in with all things going on at Fidessa, and we'll look forward to how these different trends and elements you mentioned play out in the marketplace in the coming months.
Yes, thanks for having me.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.